Hello traders, good evening. So we can see that Nifty spot has been able to bounce back by close to 1.5% in the last 4 trading sessions. When we see this entire level, it has been an important psychological level for the Nifty spot in the daily time frame chart. By the way, this is the daily time frame chart over here and this is the weekly time frame chart. And today I'm just going to put more stress on the daily and weekly because that is where exactly the movement is visible to me. So as I was talking that the bounce back has been pretty good. It has been a short bounce back, a small 4 days bounce back. But what is visible to me is contraction of volatility. This is the first time ever on 8th of August when this particular band, a small support band, if you want the coordinates are 24,524 to 24,465. This was broken on closing basis. But immediately on the next day, if you just have your eyes glued on this candle, this is probably a candle which literally shouts, home running for the bears. Because generally when this sort of candles are made, the market turns up way too fast. But instead of that, what has happened, once this candle was made, the next day we had an inverted hammer over here. And after this inverted hammer, consistently what we can see is two small spinning tops. Now, only these spinning tops are not very important. Where they have been made, that is very important. These spinning tops, especially these two spinning tops, they have actually come at a place where they are within the entire body of the previous candle, which means the volatility has gone down in the last 2 trading sessions. Now, when the volatility comes down, it clearly shows that choppiness is there in the market, and even if market wants to go higher, volatility has to contract. Now, just have a look in the time being in the weekly time frame chart. In the weekly time frame chart, we did had a downtrend, and suddenly with this one candle last week, the trend has turned flat. The way the displacement of moving averages is still fine. It's still positive. That is not a problem so far. Even the candle which has been made is pretty good. It's trying to engulf its previous day's red body. Although the red body is not very small. If it was a very small candle, then it could have turned around on the upside. But still, I should say it's a good candle in comparison to the last 6 weeks of selling, which has finally been broken by a green candle. Now, which way the markets will head? Will it head north or south? For me, it's very simple. The minimalistic thing which market needs to do is sustain above this level, 24,700 or 24,750, because this candle is not allowing the next 2 days price action to either go below this or above it. So for me, this is very, very important that once if market wants to shoot higher, it has to take off this level, which is 24,700, or if you want, you can add maybe 50 points more to this, and you can say maybe 24,750 is the level above which if we trade, then maybe we can see a short-term pullback. And on the downside, if we break this level, which is close to 24,330, 320, then the next support will be in the zone of 24,100 to 150. That's it. All right. Now, which will be the sectors which can support the Nifty to go higher? For me, the first sector should be Bank Nifty. I'll tell you why. If you check properly, in the last few trading sessions, what has happened within this zone? It is a consolidation. Basically, it's a consolidation. And I'll try to zoom in a little bit more for all of you and just have a look over here. This candle pattern is a bearish engulfing pattern. Bearish engulfing pattern appearing in markets are near supports. It's a positive thing. Then this is, you can say, this candle pattern is also bullish. You will say that this is a red candle. Both of these are red candles, yes. But red candles and this sort of pattern emerging near supports is a good sign. That is what I would say. Even RSI is near oversold zone. It's not exactly below 30. It's near oversold. Only thing is the weekly candle is not very, very attractive. The weekly candle is not at all attractive. It's okay. It's average. The trend is flat in the weekly time frame charts. That is what I would say. But yes, this consolidation is a good part. And if we do not sustain below 54,900, then maybe we have a short on the upside. But we need to pay attention that if the bank nifty has to go up, all right, if the bank nifty has to go up, then the biggies, then the big names in the private banking space have to outperform. Because I think there are 2 to 3 names, I'll not take the name of stocks, but there are 2 to 3 names in the private banking space which have decent to high weightage in the private banking space and in bank nifty. And you can see that we are at a 161.80% Fibonacci extension in private banking space. So it's just a matter of fact that we are at a support. We also have a bearish harami over here. You can say this pattern. Again, a pattern, bearish pattern appearing at a support is a good part. Nothing visible in the weekly time frame chart. Nothing great visible with the weekly time frame chart because the good support in the weekly time frame chart is somewhere here, is in the zone of, you can say 26,060, or in case if you are trading above 26,620, then we are at support. But unfortunately, even if you're trading above this is an inverted hammer. So weekly charts are okay. They are not that great, but yes, we do have a positive pattern. We are at a support, and let's wait for the next week's price action. We'll come to know what happens. So just wait and watch what happens. Also, one thing is that RSI is oversold. RSI is oversold. So this is also one thing which is in our favor. Again, we'll have to wait for the next week's price action, as I'm saying. PSU banking space. Now, PSU banking space is, I would say, much better than the private banking space. The trend is up in the weekly time frame chart. The trend is up in the daily time frame chart as well. Only the thing is the displacement of the moving averages is still not great. Over here, it is good. Over here, it is not so good. So I think as price continues to move up slowly and steadily, I think this displacement will change, and specifically it has to trade at least above these highs, which is probably in the zone of 7076 or maybe 7080. It has to sustain above it and start shooting up. Then the displacement of moving averages will change and the view in the PSU banking space will change. And a matter of fact is that this support has not been broken is a good sign. Okay. Energy pack. Energy pack, I would say that the weekly time frame chart is in a downtrend. We are at a good support in terms of Fibonacci, in terms of a good price cluster. We are at a good support. In the daily time frame chart also the trend is down. Again, we are at a support over here. So in terms of extreme short-term trend, extreme short-term, probably I'm talking about the 2-hourly chart. If you check 2-hourly charts, it is looking pretty bad. Again, if you switch to the daily time frame chart, yes, we are in a downtrend, but we have already tested this 30 level. We have bounced back and now we are again going down. So if we close below this low over here at 34,380 and then the RSI doesn't make new low, then probably there is a chance we can have a reading on the RSI which clearly shouts that the momentum on the downside is weakening. So this is something which I am saying in a little bit of hindsight. It has not happened as yet, but it can happen. This pattern can only be completely ignored in case if suddenly there is such a big sell-off that we have very, very big red candle. Only then possibly this low of RSI will be broken. Otherwise, there is not great chance that something like that can happen. So I think only time can tell. Probably it's good time to wait, and people who are short-term traders in the energy pack, probably who have initiated negative positions, please be careful of your positions and trail your stop losses aggressively. Autopack, if you have been a consistent follower of my videos on YouTube, then you would know that I've been continuously saying that the trend in this particular sector was positive. Only thing that it was sideways, and I clearly told that this particular zone should not be broken, which has not been broken. It has shot up. Yes, in the short term, it is slightly overbought, slightly, not that much, but even the RSI is not into the overbought zone. Little bit consolidation is not something which cannot happen in the next 1 or 2 days, but overall chances are that the trend might continue on the upside. Consumption pack looks pretty good. The trend is up. Momentum is catching up. The daily chart momentum is great. I think prices can continue to turn on the upside. Finance pack. Now here is where things can turn a little bit more interesting. Weekly time frame chart trend flat, momentum down or flattish. The daily time frame chart trend is down, but if you convert this particular chart to a line chart, you will very clearly see that we are in a positive divergence. Now this positive divergence is pretty strong. It's not a very weak divergence, and this divergence has come up at a previous low, which is a good sign. And we do have a hammer over here. Also we have a bullish bell tool, although the bullish bell tool, is not very strong. But I think the first thing which should happen for a rally is surpass this cluster. Once we start trading above it, close above it, then maybe the pullback can start. Okay. FMCG pack, I would not like to speak anything on the sector. Yes, as a sectoral chart, it's looking bearish. It's not looking that great. But probably there are stocks which are of higher weightage. Maybe some stock is bullish and some is bearish. So it's very difficult to say exactly where this particular sectoral chart will move, either on the upside or on the downside. And when it is unsure, it's best left aside. IT pack. IT pack has corrected nicely. We are at a 61.80% Fibonacci retracement in the weekly time frame chart. We can see it's a decent support. In the daily time frame chart, I would like to convert this particular chart into a line chart, and we can see a triple positive divergence, one after the another low which has been made on the line chart of the IT pack is lower, and over here we have consistent higher lows in the RSI. So this is a classical positive divergence which is showing that there is a decent possibility of the price turning upside. But since the trend is so strong on the downside, even the pullbacks are not sustaining. You can see the first pullback which came on this day, and then the second on this day, both were rejected from the higher levels. So I believe if you want a pullback to continue on the upside, you will have to take up this high first, and only then you will be able to see a pullback. I'm not talking about a bottom out or something, but the way this entire sector has corrected, it certainly needs a little bit more pullback before we take the next leg on the downside. Metal pack, it's consolidating, it's choppy. The trend is absolutely flat. Over here you can see the trend is flat. The two candlestick over here are also bearish in nature. They are not bullish, they are bearish. Even the price action over here, if you see, is very choppy. We have an inverted hammer candle, and then we have a bearish bell tool. So overall, it's not a very good ground for a short-term trader, a momentum trader. But if at all, one thing which I like about this sector is it has not broken this low, which is only one single thing. But I think swing traders would have found very difficult to make money. In case if this sector wants to revive and start new momentum upside, then 9500 level should be broken on closing basis, and probably there is some chance that we'll see some momentum. Now the next sector is infra. Infra, you can say that 1, 2, 3, 4, 5 weeks of negative close and then 1 week of positive close. This candle is within the entire range of this candle. So clearly shows that the volatility has contracted. Even over here, you can say this second last candle, you can say that the volatility has contracted. All right. Now going ahead, what we can see, one single positive thing, that this low has not been broken. This low has been respected pretty nicely, considering that this low is much more important when you actually have a look at the weekly time frame chart. It's a very, very important level. When you see it on the daily chart, it may not look like one, but on the weekly time frame chart, it is an important level. So yes, we are at a support. We have 1 week of bounce. The momentum is flattish. Now what happens is, I think only time can tell that whether we make this particular bottom a final one, do we bounce back finally, start a new uptrend for swing traders or not, only time can tell. But we have corrected pretty deep enough to start a new uptrend, that's for sure. So I think only time will tell. Pharma pack. Pharma pack, I should say, was going pretty nicely over here in this zone, and then suddenly one big stock with a higher weightage crashed, and then suddenly this crash has happened. The weekly time frame chart is trying to improve itself with a very, very big green candle in comparison to its previous big red candle. But at the same point of time, you can see the daily time frame chart is not that great. The displacement of moving averages is not great. RSI is not that great. The daily time frame chart candle is not that great. So yes, I do have my doubts on this particular sector, although it's a bit strange that how, in one particular sector where the weekly time frame chart suddenly in 1 week starts looking great, but on the next side, in the adjacent chart, in the daily time frame chart, you don't have a confidence. So this can happen in trading at times. And the best thing to do when there is lack of clarity, just step aside. Do not do anything else foolish if you don't understand what's happening in the market. Just stay aside. So we'll wait for a week. We'll see what happens, and then we'll take a call. PSE, the momentum is surely on the downside. The trend is up in terms of displacement of moving averages, but the prices are turning down. And we can see 1, 2, 3, 4, and 5 weeks of straight negative close, 1 week of positive close, but again, you can see the candle is not that great. Now let me convert this chart into a line chart, and you can clearly see that we do have a positive divergence. Now this positive divergence has been made at a 127.20% Fibonacci extension. Things have improved, I can say. Like there is a hammer, there is a hammer over here. Then there is a decent looking candle, then couple of candles which are smaller in size, and then suddenly one big red candle. So overall things have improved. We have bounced back, but the shape of the candle is not that great in the weekly time frame chart. In comparison to that, the previous week's candle was good because it was a high wave candle. This week we have, as I'm saying, it has bounced back, but the last candle of Friday has unsettled me, and we have a level on the upside close to 9700, which can act as a short-term resistance. So if we want this pullback to continue, we need to possibly close above it, and then only we'll be able to see some short-term momentum on the upside. Realty pack. Realty pack has, been a total outperformer when it shot on the upside. Even when it has corrected, we can see a very, very sharp correction with extremely high momentum, extreme high momentum. Now, nothing positive over here in this chart except one thing, that we are near important supports. That's it. And let me have a quick look at the monthly time frame chart. In the monthly time frame chart, the trend is, because it's 16 today, we don't know what will happen by the end of this particular month. The positive thing is we are still not near the closing of the month. If this was a closing of the month, and if we would be slightly lower this candle, then the overall chart structure would not look that great. So there is a chance of a bounce back, but it has to materialize only by looking at the chart that it is at a support, and okay, we do have a hope. So by hope trading cannot happen. It has to bounce back. It should not go below the recent low, and then it should start moving on the upside. So I think this is a wait and watch game, what happens. Midcaps. Midcaps, I believe overall the momentum is down, the trend is down. Even in the daily time frame chart, things have improved in the last few trading sessions. If you want to improve the momentum, I think it will have to take out the current last week's high at least. At least that should happen. It should also surpass 57,060, 57,080 for the momentum to continue. Then we'll see what happens. We'll take a secondary call probably by next week's end. But this is the minimum thing which the mid-cap sector should do by taking out the last week's high. All right. So I think by summing it up all, it's not evident very, very confidently that yes, we are at a bottom, we can bounce back. But there are few signs little bit here and there which are saying that yes, there is a slim chance of a pullback, that the market can shoot on the upside if at all it happens. If at all, I'm using the word if at all this happens, is it going to be a short-term bounce back in this overall correction, just a short-term blip on the upside, or does it turn around the entire market? That is possibly what we'll have to figure out in the next 5 trading sessions. All right. So wait patiently. Do not be hasteful in trading. Do not go gaga on a gap up or a gap down in the market on Monday or a Tuesday. Wait patiently. Try to understand what the market is trying to tell you, and then take an informed trading decision. All right. So I hope these weekly sectoral analysis videos are adding value to your own research as well. Trade less and trade wisely. Thank you.